Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have Rene Goehrum, the CEO of RX Biosyent. RX trades on the TSX Venture Exchange under the symbol RX and in the US under BIOYF. The company is trading at $7.33 with roughly 13 million shares outstanding, or about a $95 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks, Trevor. I'm really pleased to have Rene with us today. Rene and I go back a long time, and I haven't seen him for a while, so certainly happy to have him here with us today. Rene, thanks for joining us, and I understand you've got a presentation for us.
Yeah, pleasure to be here, Paul. Nice to see you again, and I do have a presentation. If you can see it, it should be on a cover slide with my name and the company name. Just confirm you can see that? Perfect.
Yeah, looks good.
Okay. Welcome, everybody. As the gents have said, my name is Rene Goehrum. I'm the CEO of Biosyent. We're a Toronto, Canada-based specialty pharmaceutical company, and we focus on commercializing innovative products. So these are products that have a point of differentiation versus other therapies or other products that a consumer or may purchase on their own, or a healthcare practitioner may prescribe to their patients. We look for products that have been developed and successfully registered or have marketing authorizations, and we bring those to the Canadian market. One that doesn't necessarily think of Canada as a massive market, but it is a top 10 global pharmaceutical market. We look for these products all over the world. Most of our deal flow for transactions has been Europe and United States, but we recently worked on some things with some potential Asian partners. As I say, we look for products that really are near to market or already in market, that de-risks them somewhat for us. And we have limited investment in research and development. We do some, certainly on assets that we own, we do some R&D, but it'd be more development investment as opposed to research. So just looking at us at a glance, we've just announced our Q4 2020 and full year 2020 results. The fourth quarter represented our 42nd consecutive profitable quarter. Our revenue was just over 22 million. All the currency here is in Canadian dollars. Our EBITDA was 5.6 million, and that worked out to EPS of 29 cents and an ROE of 14%. If you are familiar with the story, you will have seen a somewhat higher ROE than in the past than you see here. And that is a function of a fairly significant cash position, growing cash and near cash on our balance sheet. And we're basically in a phase of introducing and launching products. So we think over time that number will head north from 14%. We've got 3 growth drivers in the business. I'm going to talk about those in a little bit more detail in a few moments. We've got three assets that are in launch mode, and our entire portfolio, these are products that are either in market, so obviously approved and in market, or approved and coming to market. So it doesn't rely on any Health Canada, the regulatory body in Canada that gives marketing authorization. We're not relying on anything from them. We feel we've got the fuel in the tank that gives us a more than double of our top line. I mentioned a moment ago our cash position. As of December 31st, we had $25.5 million in cash. And we feel that is ample to support a double-digit revenue growth over the next 5 years. The company has no debt, short-term or long-term. We have operating facilities available to us, but no debt at this point in time. We have a scalable commercial platform. We've got a national sales force. We've got 11 products that are approved. And we have a lot of the infrastructure that you would likely find in a larger company. In Biosyent, we don't have everything in-house. The company is just shy of about 50 employees today. And if there are certain additional expertise that we require on an occasional basis, we've got a roster of external service providers. The company is well capitalized. We have not raised any new financing through equity since 2002. That's not a typo. We've been buying back shares fairly aggressively since December of 2018. 11% reduction in our shares outstanding. I believe the last time we issued a share option was about 2 years ago. And if you do the math on our cash and our shares outstanding, we've got just under $2 a share in cash in the bank. The management team is experienced. Our leadership team, on average, has a tenure with the company of just about 8 years, and we're 23% insider owned. I'm the largest shareholder of the company. So I'm going to talk about the growth drivers in the business. So Ferromax is an oral iron supplement. We've been marketing this product now for over 10 years, and it has grown over those 10 years to become the #1 recommended oral iron supplement by both pharmacists and doctors. This is now 5 years running, and in that entire period of time, both our unit volume and our dollar volume on that brand has increased. So it's given us a really strong foundation for new life cycle management initiatives and product innovation, and we have just started that process by introducing in the fourth quarter last year a new oral iron delivery system, a patented oral iron delivery system that gives us a foundation for future innovation on Ferromax. It replaces the previous generation system that we used, or formulation that we used. And through this process, we changed packaging and to drive compliance and essentially better protect the brand from competition. And we've got new products coming to market over the next year through 3 years after that. We're going to be bringing new innovative products that basically better serve patients and doctors and consumers. So this is for iron deficiency, iron deficient anemia, and patient populations that have certain nutritional requirements. And you'll start seeing innovation in that regard. Starting early in 22, we launched the first product, which was Ferromax Therapeutic 150. We launched that product in November, and we essentially replaced all of our, what I'll call, old Ferromax with the new Ferromax. And if you're listening from Canada, if you walk into your local pharmacy, you'll see that product on the shelf now. And very little of the old product is available in the market and is being consumed as we speak. The second growth driver for the company is Tibella. It's a women's health product in hormone replacement therapy. This is for short-term treatment of vasomotor symptoms. These are hot flashes and night sweats. And it's about 60 to 80% of women have these symptoms during or after menopause. And it for many of them, for about a quarter of them that have these symptoms, it impacts their quality of life. So Tibella is an innovative product. It's a product that was available in Europe for many years. We launched it at the end of July last year. It's been an interesting time to be this active with launching new products. You know, living in a COVID world now, phase 1, phase 2, and now in Canada, at any rate, entering phase 3 of COVID. It's been a challenge. We've had a really positive feedback on this product. The number of patients on it is now measured in the hundreds. I don't think we're yet at 1,000 patients that are prescribed this product, and each patient is worth to us in the area at full compliance, that she's taking her medication regularly as prescribed, is worth about $1,000 per patient to us per annum. We also just recently launched a new pain medication. This is the first acetaminophen and ibuprofen combination in a single pill in Canada. The brand is Combo G-Sick. It provides superior pain relief to either acetaminophen or ibuprofen on their own, so with a similar amount of medication. So this is just an example of putting two proven pain relievers together in one product. This idea has been done in other markets around the world. Others have tried to get such a combination approved in Canada. This product was approved in 2018. We licensed the product in late 2019 and launched it just in December. So we're really early days. We're acquiring new points of distribution on this literally weekly as we speak. About 250 to 300 pharmacies are stocking this product every week, and we've just recently done what I'll describe as the marketing launch, public relations launch, and the feedback on the product has been good. And once again, if you live in Canada, you get a chance to go down to the pharmacy and check for options to take care of mild and moderate acute pain. This is quite an interesting product. So as we move forward with our business, we've got a really disciplined approach to managing our P&L and our balance sheet. We continue to grow our business profitably. We're investing in growth. We're investing in licensing products. So we've got some growth left in the existing portfolio. These new product launches are high priorities. We feel strongly that they're going to give us fuel for double-digit growth for several years. I mentioned earlier that we've got some life cycle initiatives coming with FeraMAX, and we think that that's going to allow us to gain more market share at continued attractive pricing for us. It's a high-margin business, and we continue to invest back into the brand to grow that business. The in-licensing process never ends. It's an ongoing thing that we've got a lot in our deal funnel right now, but we do have a new women's health product that was in-licensed at the beginning of the fourth quarter last year, and that product is already approved. We've got a few of these product launches that are backing up on each other as we speak, so we're going to push the launch of that product out to later this year when we see a little bit of more visibility in a post-COVID environment. But we've got several initiatives or growth products that we think that give us fuel for growth, and a base business that's extremely profitable as we move forward. So just a quick look at our stock information. Shares issued and outstanding, I always focus on what's the fully diluted number. So 3 lines from the bottom, a little over 13 million shares. We've been in the market buying back shares. We're in blackout. I think our blackout comes off tomorrow, but the agent we've appointed has been in the market just recently. So that is an accurate number as of yesterday. I think that's what I've got to share with you. I'd be happy to take questions and address anything, Paul, that you want to know more about the business, or any of your other listeners.
Oh, fantastic. I appreciate it, Rene. The first thing I'd love to dive into is a little bit more information on the different products. Obviously, FeraMAX is your big product. It has been for years. But yeah, what makes FeraMAX? Why are you guys selling so much? What makes it so good?
Well, for those that have had to take an oral iron supplement, typically what's available in the market that gives a lot of gastrointestinal upset. So causes constipation, or the opposite, diarrhea and gastric pain. And FeraMAX basically mitigates that problem. It's a carbohydrate wrap around the iron, and it's digested differently than what your typical iron product. So that's the basis on which that business was built, and it solves a real problem in the oral iron category. And we've just gone from strength to strength to make sure that doctors, pharmacists, and women, I say women because iron is 80% consumed by women, know of the benefit of this product.
And so I noticed, I think you have about 48% market share for that product. Give us a sense of how big the addressable market in Canada is for you guys.
Yeah, so that's not a 48 share. That
okay.
just to want to kind of clarify that. 48%. I think the 48 number was pharmacists. So
Okay.
this is research that's done independently. It's not Biosyent research, where pharmacists are canvassed in certain therapeutic areas. And in this case, they were asked what is their #1 recommended oral iron supplement. And Ferromax was chosen 48% of the time. Our share of the iron doses is about 11% of the doses. So it's a very fragmented market. Would represent in the area of just under 300 million doses a year are sold of iron supplements in Canada.
Does that include the non-prescription based doses? Because your product is it prescribed?
No. Well,
Okay.
It is promoted like a prescription product.
Okay.
Iron in Canada is kept behind the counter.
Okay.
It's scheduled there, but you can purchase it without a prescription. So we promote it to healthcare professionals. So it's kept behind the counter, but it's not prescription. I think what you may be thinking of is, your local supplement, your multivitamin.
Right.
The amount of iron in a multivitamin is you might as well eat a Big Mac or something. Like there's very little. It's more, as it's called, a supplement.
Right.
To supplement your diet. So no, the 300 million doses I'm talking about are therapeutic iron doses.
And that's over the course of a year?
Yeah.
Okay, good, clear. Okay, gotcha. Now, I remember a couple of years ago when we were talking last about Ferromax. I mean, there's some opportunities where instead of you guys just working in Canada, weren't you looking at licensing outside of Canada?
Yeah, we've got a number of partnerships outside of Canada. We're mostly right now in the Middle East.
Mm-hmm.
So they're essentially, we license the brand, the trademark, and then we have buy-sell relationships. So we have distributors of the product outside of Canada. It's not a lot, but in the past, it's been a significant contributor to the business.
Mm-hmm. And outside of Ferromax, really, the model you guys have, like most specialty pharma, is you don't manufacture product yourself. You have deals with the manufacturers. They bring them to you, and you're really the marketing arm for these products. Is that correct?
Yeah. So we do not have a bricks and mortar manufacturing operation. We do have certain of our products where we buy in bulk and have them packaged locally. Mm-hmm. And our sales, our international sales for Ferromax, they never even come to Canada. This business is run through a wholly owned sub in a favorable tax jurisdiction. And then, so some of that packaging operation takes place outside of Canada. In Canada, we have some packaging operations and some subcontract manufacturing. But yeah, we are not a manufacturer.
Okay, good. Now let's talk about Tibella. What's the competitive advantage, or what makes Tibella, a go-to product?
So, hormone replacement therapy has, been used as a therapeutic class for years in managing postmenopausal symptoms, but not all products address the same issues. So there's vaginal atrophy, there's vasomotor symptoms, osteoporosis. There are a number of different issues that are created in a postmenopausal woman. And so ours is addressing vasomotor symptoms specifically. And the healthcare professionals that prescribe the product like it because it addresses some very specific issues with breakthrough bleeding and managing some very specific symptoms. It's unique in that it is a hormone replacement therapy that doesn't actually contain any hormones. So it's got 3 compounds that are metabolized as if they were hormones. So it is quite unique, and it is the only one like that in the market in Canada.
And give us a sense of the addressable market for that product. What do you think?
Yeah, it's the whole category is probably around a 200 million therapeutic class in Canada. Tibella addresses a subset of that patient population. So I don't want to kind of leave the impression that it's a $200 million market. It's the whole class is 200 million. Products get mixed and matched by healthcare practitioners in the category. So it's you know, they're obviously half the population are women, and where we are demographically now, age-wise, there are a number of women that are in menopause or about to be in menopause. So it's a fairly sizable patient population, but in dollars, it's about 200 million.
Okay, gotcha. And then Combogesic, you know, it's basically a combination, my understanding, of two pretty common pain medications. Why is it better than going and just grabbing two pills and throwing them together?
So there's a couple of reasons. One is the ratio. So the ratio that Combogesic has is a patented ratio. This product has been marketed now initially in New Zealand and Australia. It's now in about 35 countries. And so it's the specific 3-to-1 ratio of acetaminophen and ibuprofen. So that's the first. Doctors, especially dentists, you know, if anybody here has had their mouth drilled or their tooth drilled recently, will have had the hygienist or the dentist suggest to them that they go and they use the brand names. I'm not going to use the brand names. You can say them, Paul, but I'm not going to say them.
Fair enough.
Our brand name is Combogesic.
Yeah.
But they would say, go get the brand name acetaminophen, the brand name Advil.
Yeah.
And but those two are on different dosing schedules. So this is the second part of it. One of them's every 4 hours. One of them's every 6 hours. You have a daily dose limit of both of those that are different. And so now, and there are actually safety issues if you consume too much of either, especially on acetaminophen. It has negative consequence on liver function. And so you got to make sure, you have to be careful. So it's now a simplification of dosing. It's also a safety question, and of course convenience. I mean, you know, you got one product. The other thing is, you know, it works better and faster. I mean, you know, that doesn't address well, I could just go buy them myself, but people don't, right? And so, in fact, there's a misconception that you can't combine those two compounds. You know, that you shouldn't combine those two compounds, and it's true that you shouldn't be combining other medicines that contain pain relief products, but this is a research product that has been fully vetted by Health Canada from a safety perspective, and that's the basis on which we think it's a really good option for both healthcare professionals, and this ultimately becomes a consumer product as well.
And to be clear, I mean, is this prescribed or is this not prescribed?
This is regulated over the counter, not prescribed, but it's kept behind the counter. So available behind the counter without a prescription would be the way to describe it.
Okay, perfect. And I know, I mean, two of the three products we've talked about seem to be predominantly for women. Is that sort of the model you guys are looking at? Are you really looking at sort of medications or therapies that are more, you know, leaning towards female population?
Well, yeah, no, that is not our only focus. We do have a women's health franchise with Ferramax at its foundation. We have another product that I didn't mention today, Repagyne, for vaginal dryness. We obviously have Tibella, which is exclusively for women. And we have a new asset in-licensed for women's health as well. Having said that, we have been looking at and in-licensing assets that take us outside of that area. Combogesic is a good example. We have assets that are in urology as well. And we're working on several things right now that would take us into new therapeutic areas. So we're not focused strictly on women's health. And I think, you know, that would narrow the deal flow too significantly for us. We see nice opportunities with good products that solve real problems and, you know, provide better therapy, an advantage for the healthcare professional or the consumer that would be outside of women's health.
Mm-hmm. Is there a way we can sort of describe, because usually you have a specific sales force that'll go and speak to a certain kind of doctor, a certain part of the industry.
Yeah.
Is that a way to look at it, or how do I get a sense of what kind of sales force and strategy you guys have?
So we, what you're describing, I would call the call point. What is the call point? Who are we going to see?
Right.
And that is actually when we're screening new assets, new opportunities, that's one of the first things we look at. What's the, what's the product, or what does it do? What's the call point? Where would I promote this product? And so women's health products are promoted to OBGYN and GPs that have, a more focused practice of women. And but we also call on urology. We've had a group that we've coined in the past, the hospital products business, and their call points were hospitals with specialists in the hospital. We've made a pivot to not look to in-license new assets that are strictly hospital, let's call them hospital budget driven. And so we still have customers and products that are consumed in the hospital, but that's not our focus. So right now we're in the GP's office, we're in the OB-GYN's office, and we're in the urologist's office. And the new women's health product will be very similar to that. Not obviously not urology, but it'll be OB-GYN and both, actually, OB-GYN and GP, family health.
Gotcha. Perfect. Let's talk about deal flow a little bit. You mentioned sort of a lot of the stuff you see is coming out of Europe. How competitive is it? What sort of parameters you guys look for? I remember when we spoke a long time ago, you sort of had a niche that you felt you guys operated well in. Maybe describe that a little bit.
Yeah. So, there's a few metrics, but one is when we're looking at an asset, we're trying to sense how big the patient population is, who the call point is, so how would we commercialize the product. So, that's one aspect that we're looking at. And, we also then look at who's present in that category or the therapeutic area. So what are the other products? Where are they in their life cycle? What are the companies that are promoting them? And what share of voice would we get? And what approach would we take to introducing that product in the market? And that gives us an idea then of kind of size of opportunity, right? So, as you asked with Tibella, for example, okay, what's the addressable market? So we've got data from the industry that'll allow us to measure the units and the doses in a certain class. We can see what the pricing is like, and then what price we hope to get in the marketplace. Because the one thing, there are rules that are changing here in Canada about pricing for drugs, and that is certainly putting a new dimension on how we assess opportunities. And there have been some examples of things that have kind of fallen out of our funnel because we don't think we can achieve the pricing that we need to make it work for ourselves and for our partner. So you've touched a little bit on kind of the therapeutic class. We're not married to a certain therapeutic class, but it's unlikely that we're going to in-license a new asset that would take us into a new therapeutic class unless there was a certain revenue threshold that would have to meet a certain hurdle. And in the past that you were referring to, I guess our hurdle was lower in a dollar volume contributor. We've moved those hurdles up somewhat. We still, we'll be happy to take the next blockbuster for Canada, but that's not our niche. Where, I would still describe our niche as a singles and doubles strategy. We think that we're less likely to run into the very large deal competitor, the Canadian sub of a multinational, for example.
Yep.
But to your competitive question, is it competitive? Yeah, the cast of characters have evolved over the years that I've been doing this. And so the kind of who's at the table, of course, they're not at the table with us, but who's who's in the deal or looking at things, that cast has changed. There's been a fair bit of coming and going. There have been a fair few train wrecks, and so the characters are different. But there's always, it's like a game of whack-a-mole. There's always another one that's going to pop up, and that's the reality. So people often ask, is it more competitive, less competitive? It's as competitive as it always is. There's always interest in assets for the Canadian market. It's an attractive industry if you can kind of overcome the barriers to entry and kind of deal with the risk that's inherent in it. But it is a good industry because of those barriers to entry, right? So that's the good and the bad.
Yeah.
So there'll be others that kind of upstart, newers that come to market.
So you have a sizable amount of cash, if I remember correctly. I think $23 million currently as of the last quarter. Give us a sense, apart from you're buying back stock, you've probably got some spend in pushing forward some of your assets. Just give us a sense of the breakdown of the use of that cash. What do you want to do with that money?
Yeah. Well, we have a fair bit of cash relative to the size of our business, size of our revenue. We have more cash than we have top line. That might change this year, I'd say. Not on the cash depletion, but more on the revenue growth, I would say. But nevertheless, we need 10% of our cash to run our business, roughly, rough put. I would say we need about 10% of our cash. So the rest is available to deploy on growth and other strategic opportunities. Over the years, we've looked at many acquisition, not in licensing. So we think of those as slightly differently. So think of acquisition where an asset is already in market and revenue generating, as opposed to an in-licensing process where a product may be approved or we've got to take it through an approval process and introduce it. So they are both capital consumers, both of those routes to market. But in pharma, the cost of those revenue generating assets is not cheap. And so, we're picking our spots and being smart about what we're willing to pay for those assets. So we're constantly looking, but it appears that 95% of our deal flow is in licensing. So, we're at some point, we've in the last 2.5 years, a little over 2 years, we've spent $10 million buying back shares. And, we're not going to do it just for the sake of doing it. I know some companies do it at any price. That's not our style. So, but I can see us continuing to buy back modestly over time, and deploying in top line and opportunities. There just hasn't been anything that we're generating cash faster than we can deploy and we can spend. And the money and the key thing I said before in my presentation, that we're operating a profitable business. We're launching all these products and we are investing in these launches, but the business is cash flowing. So when we're sitting here in a year from now talking again, our top line will be greater. And I imagine our cash position will be greater as well. So at a certain point in time, there'll be opportunities that open up to us as that balance sheet grows.
Yeah, perfect. Give us a sense of the timeline that you guys work with. Like when you find a product and you've decided this is the product for us and you sign an agreement or something, how long is it typically before you get that product approved and sold? And what's the process to go to get that there?
Well, so there's a hi, how are you with the let's say the owner of the technology or the asset that we wish to in-license, and that is a very thorough diligence process on our part.
Power BI dashboard.
That can take some time, right? So that can take some time to get the deal done, period. We have a part of that process is we go talk to, let's say, talk to the customer. So talk to the doctor in that therapeutic class.
Mhm.
If there are any other things that we need to consider, we put it through the pricing ringer, and then we talk deal terms. Once we get to the point where we think, oh yeah, this one could work, we talk some deal terms. And then when we sync up on deal terms, well, then we really have to go do the diligence, right? We don't want to spin our wheels doing deep diligence if we don't think we can get the framework of a win-win deal. So that'd be the first part of the process. And then let's assume for a moment that we've successfully done a transaction to in-license. So that, that asset is either approved by Health Canada or not. So we've got one now that's approved by Health Canada. So the process for that is different. Packaging, we may want to go back to Health Canada with some fine-tunements of directions of use and labeling and that type of thing. It's got to be manufactured. We start pre-selling it. We start advisory boards with doctors to maybe start pre-seeding a market. So that's one path, faster. When the product is not approved, it could take us anywhere from 6 to 9 months to get the dossier kind of, let's say, prepared to be submitted to Health Canada. And then Health Canada has about a year. They take a year on prescription products to approve a product. And then that rest of that process would start then, would kick in then. So it's long. The lead times are long.
Mm-hmm.
Yeah.
And then barrier to entry for others, and they're dealing with same sort of issues. And
yes.
Oh, yeah.
Yeah.
Listen, I want to remind everybody that's listening today, if you've got any questions you want me to ask Rene, just feel free to use the chat function. I see there's a few already, but I'll get to those in a second. But yeah, just a reminder, if you got some questions, let me know. Rene, give us a sense of the background of the management. You guys got a pretty healthy management team. You guys have been doing this for a few years now. Tell us what you can about the team.
Yeah, so there's 8 of us. I lead a team of 8. I used to get away with saying I was the least experienced pharmaceutical person in the company, but I can't say that anymore per se, not in the company. On our leadership team, those that are kind of engaged in the true kind of pharmaceutical area, they are deep pharma, big company pharma people. Our CFO comes from the packaged goods industry or manufactured products. So, he's got 2.5 years into pharma. And our HR director, she comes from other industries as well, more HR generalist, I would say. But the others come from large pharma backgrounds, some with large pharma and entrepreneurial experience, others just large pharma experience. Our medical director is a trained medical doctor, practiced as an MD, and then pivoted to the pharmaceutical industry and has been working in pharma for over a decade. So it's kind of a mix of people, but we're more, the leadership team at any rate are more in the experienced category. And I can't say I have no pharma experience anymore. I can't get away with that one.
You're not a rookie anymore. Absolutely. Any management holes you want to fill, or is there anything more that you need in terms of building up the team?
Yeah, as we're looking at new therapeutic areas, we would look to acquire talent that might shore up a certain area with experience there. I didn't get much into our business structure, but we go business unit structure. So we build a team around the brands and the customer. And so as we move into new areas, we need to bring leaders in that can take a new business unit. So what's unique there is that we have a business unit structure in a smaller company. It's not unique. It's done in much bigger companies. We've just taken that approach in a smaller organization. So I think we've got some opportunity there. There's a lot going on in our business. And I think that as we've grown, we found that there's enough there to put on an individual's plate to focus a little bit more, not to be quite as generalist. So I think over time we may see doing that. Our regulatory and medical is headed up by one individual. There'll come a day where that's probably 2 people. that's an example of something, but it's not an imminent, it's not a need. It's not keeping us from moving our business forward.
Mm-hmm. Mm-hmm. Gotcha. Let's take a couple questions from the chat function here. Why are some products kept behind the counter without a prescription? Like what determines whether it's behind or in front of the counter?
Yeah, so these are scheduled. So NAPRA is a body that schedules products,
Mm-hmm.
and iron is just simply scheduled behind the counter at a certain threshold. They've determined it to be a certain threshold.
Mm-hmm.
Health Canada also has regulations. If it's prescription, it's kept behind the counter. So that's just flat out. If it's a prescription medication, you can't just walk into a store and pick it off the shelf. I think everybody broadly knows that.
Mm-hmm.
So in some cases, products are scheduled, and then so they just that's where they have to go. And that scheduling depends on how much, in the case of iron, how much elemental iron is in the product. In the case of Combogesic, that is a different scenario where it's scheduled for a certain amount of medicine of each of those components that are in the package. And I think there's some interest there around safety and giving a pharmacist an opportunity to counsel a patient. So that once again, it's actually and it's also scheduled to be kind of in a sight line to the pharmacist. So there are different rules around that.
Gotcha. Speaking of Combogesic, I've got a question here. Will Biosyent be launching the Combogesic intravenous form?
Yeah, so we have that product as part of our kind of our I'm going to call it an option on that product, and we're just going through the process to submit that with our partner to Health Canada. So that process is just starting now, and we'll see at the end of the process. We'll make a call on that asset. We have not assessed it commercially.
Gotcha.
Yeah.
And another question here: what's the estimated peak sales of your current portfolio of products?
On an earlier slide in my deck, I said that we had fuel in our portfolio to more than double. It depends on how far I go out into the future, because we have quite a number of assets that we're looking to bring to market under the Ferromax brand, and but it's more than double, so more than $45 million. I'm taking 22.3, which is what we did last year, and I'm doubling that. And it's north of 45. And I'm not saying 45.2. I'm north of 45, likely north of 50, likely north of that.
Gotcha. And how long does Biosyent hold the Ferromax license for? When, if anything, is the next renewal?
We own the mark. That's our brand.
Mm-hmm.
Think forever.
So basically, exactly. So you have it forever. Now, and mind you, you do, if I remember correctly, you do out license it. So you're there's other partners that have a time frame with it as well in the Middle East, I believe you said. Right?
Yeah. So our out licensing transactions are typically shorter periods of time.
Okay.
Yeah.
Gotcha. Let's talk a little bit about the stock. You said insiders own about 23%. Can you give us a general makeup of the balance? Who do you think owns, the rest?
So we had take yourself back to 12 months ago, right? So the proverbial crap hit the fan. Lots of uncertainty with COVID. The markets went slightly haywire. And we turned over some institutional owners, I think, in that period of time. I think there were some owners that hit the exit switch because they had to. They had redemptions and they had to sell. I think we went from about $6, I can't remember exactly, but from about $6, let's call it, to a little over $3. It was fantastic for our NCIB. We snacked on a lot of those ones.
Mm-hmm.
So there was a fair bit of turnover there, and then we've had some new buyers of a larger size come in.
Mhm.
I could not, today I don't have that data. I couldn't tell you how much, but I would say we've got two significant owners that I'm aware of, and a couple more. So a decent position, but I think there's also a fair bit of it in the hands of individuals that invest seriously and kind of not kind of
A little bit sort of the sophisticated retail.
I think
fair
so.
enough. Yeah, fair enough. And you guys should have coverage. Remind me which firms are covering you right now.
Raymond James and Bloomberg.
Okay, good.
Yeah.
Gotcha. Perfect. Sort of final question before I let you wrap up here. But Rene, what's your end game? When do we see Rene hang him up and go golfing, and what would cause that to happen?
Well, I'm having too much fun.
Yeah.
I can remember being a 15-year-old that wanted to be an entrepreneur. So now I'm, running a business that's got a great runway for growth. We're for sale every day, as you know. But sometimes in a technology business, you're building the business, and you know that the next stage, it's got to be another owner or ownership group that's just got to take it to the next level. I don't think that's the case in our business. I think there's certain elements of evergreening in our industry that innovation doesn't end in pharmaceutical or healthcare products. There's a lot going on right now in terms of a changed market, both in terms of how the patient is interacting with the doctor and how we're interacting with the doctor. So there's a fair bit going on there. So it's quite interesting. And I'm too excited to grow the business to think about playing golf full time. And I play enough to be happy with that. I don't know what else I'd do. I couldn't sit on a chair and play golf.
Gotcha.
I got too much energy to push this business forward. So nothing imminent, not going anywhere.
Yeah.
Gonna work on growing the business.
That's awesome.
Yeah.
Listen, this is your opportunity to sort of leave all the audience with any kind of parting message or any key takeaway that you want them to know about Biosyent that maybe we didn't cover, or even stuff that they should watch out for over the next 6 to 12 months.
Sure.
What's your key message?
Yeah, I'd say this. I'm sure there's some people on the call that have heard of us. Others have never heard of us. So, if you think of a business that is capital light, generally capital light, you've heard my comments about cash generation, and that gives us the option to do some significant things down the road. We've got a patient approach to the business. I'm still here. I think I met you, Paul, 7 or 8 years ago.
Mm-hmm.
There have been lots of people in Spec Pharma that have come and gone and done silly things with capital. We think that fairly destructive. We've got a patient approach. For those that are familiar with us, you will have thought that, geez, there hasn't been much going on in the last few years. And I would say there's more going on. We're like that duck on the pond. The feet are paddling very, very quickly underneath the water line.
Yeah.
And there's some really interesting things that I think might be misjudged at the current state. So I would just kind of keep an eye on how we're doing with our new assets and with new products to market. I would keep an eye on that. And certainly I do this for those that are existing shareholders. I just give them something to be aware of, is that we're traditionally at a very high profit ratio, kind of operating profit and net income, and we are investing in growth. So we're going to be profitable, but those ratios are going to be changed somewhat while we invest, and those products need to develop in the marketplace.
Right. Now, one question just popped up in my mind. You're a significant shareholder, and there's a lot of cash on the balance sheet. Ever thought of giving a dividend?
Yes.
Okay.
Yeah.
Good.
That's and thought of and discussed, and it's not I would say it's not imminent, but that at some point in time is, you know, on the assumption that we can grow the business double digit, as we expect to be growing double digit, and we're cash generating, then that is an option as well. Yeah.
Great. Listen, Rene, I've watched you for a number of years now. You know, I was an early investor, did very well, and I continue to look at you as one of the premier microcap CEOs. So congratulations on a heck of a run so far, and I expect you'll continue that run. I want to really thank you for joining us today. It's been great, and it's been great to catch up. It's been a while, so appreciate that. But if somebody wants more information, what's the website? Where can they get that information from?
Yeah, go to biosyent.com, BIOSYENT.com. We put our financial information that also gets filed on CEDAR. It goes under our website, all our news releases, typically links to our brands. Most of our products have their individual websites as well, so you can find links to those through biosyent.com.
Perfect. Promise me it won't be another 2 years before we talk again. Yeah. We'll catch up sooner than that. So again, thank you, Rene, for joining us today, and continued success.
Great. Thanks very much, Paul.